All right, folks, let's take a look at how we can use the economic calendar to find setups or opportunities to practice in. We're looking at the economic calendar for October 5th, 2020, and I want to take your attention to 11 p.m. and the time is set to Eastern Time. Okay, so all of my students have their chart set to this time setting. So at 11:30 p.m. Monday, October 5th, RBA rate statement and cash rate was scheduled to be released for the Australian dollar at 11:30 p.m. Eastern Time. I don't care what the actual is. I don't care what the forecast is. I don't care what the previous is. I'm not concerned about that. I'm looking at the red indication here that it's a high impact market driver. So regardless of the information or the data that's released, it can have a lot of impact and cause displacement in price, and that's what we're looking for. So let's go over to the charts and take a look at the Australian dollar. So I have the chart set to October 5th. This is a 5-minute chart just to illustrate along the lines what I've taught already on this YouTube channel, but I'm also going to teach you how to blend two patterns together within a market setup. You can see the market has been trading sideways in a consolidation, leaving relative equal highs along the way. And at 11:30, which is 23:30 here on this setting, you can see here, the time is set to New York time. So if you have your chart set on TradingView with that time frame, everything will always match relative to my lectures. At 23:30, that's 11:30 p.m. New York time or Eastern time. And this is the run above all of these relative equal highs. We're not trying to forecast a move. We're waiting to see, does it run above that and will it stay above it? Well, it doesn't. It goes above it and rejects and breaks down. Your eye should be trained right to here, because this high, this low, and the higher high, that's a pattern that I teach on this YouTube channel, which is my ICT bearish breaker. The idea is that this liquidity that will be resting above here would be in the form of buy stops. We call it buy side liquidity because running above that does two things. It takes traders that are short out by running their stops, so it breaks their position. It also puts traders on the long side on a breakout should they have pending orders resting above here. You'd be surprised how many people trade like this. It breaks above it, trips those traders long, and their stop loss would be where? Below here or below here, relative to whatever their account size and equity risk management would outline. What we're looking for is the narrative. It runs above it and then it breaks down. Fine. If it goes below this low here and it trades back up to this low, now notice what I'm teaching you here. I'm not teaching you support and resistance, because if that's the case, why not just use this low or these lows or this low or these lows here? Why aren't we referring to any of those? It's the narrative behind the specific level that's being referred to. That's what makes this level, as I teach it, as an ICT bearish breaker. If this low is taken out, which it is taken out here, and trades back up to it during a specific time of day. What's the specific time of day? Well, I've been teaching 8:30 to 11 o'clock in the morning Eastern time. You can find setups. You can find optimal trade entries there, and you can also blend a breaker pattern with an optimal trade entry. So I'm going to add some annotations real quick. So here's the breaker, the buy side liquidity that gets purged at the rate announcement at 11:30 p.m. Eastern time. It runs this, and then we wait. What are we waiting for? New York session. New York session trades back up into the breaker, and we can have a short on two things. The fact that we traded back up to the breaker, which is this low, and an optimal trade entry. Using this high here. Now, why this high? It's not cherry picked. That's the London kill zone session high. So we're going to take that fib, and all we're doing is getting a measurement of overbought, oversold. It's not the fib that's causing the magic here. It's not. I'm not trying to sell the idea that the market's working off of just the fib. It's the narrative. The narrative is all of this. It runs, gets everybody offset, and then breaks down all through London. You don't need to be up trading London. You can wait till New York session, and then with the 79% retracement level, carry that over in time, starting right here at the beginning of starting exactly at 8:30, which is our New York session window. It's not the New York kill zone. It's just the 8:30 beginning where the news embargo lifts at 8:30, and all the way till 11 o'clock. Already you should be able to see the optimal trade entry that overlaps with the breaker within the time window, 11 o'clock. You have up to 11 o'clock to take the trade. So we have an overlap of the breaker and optimal trade entry, the range from here to here. We're just extending that out in time. All of this is just waiting for the New York session. Then the volume that comes in, dog piles in on this optimal trade entry. And we're going to scrunch this up. And we have an overlap of 70, 9, 9, and 9 pipettes. See that right there with the standard deviation of -5. And we have an old level of equal lows, as I teach again on this YouTube channel. So there's sell side liquidity down here. So bank traders, let me take this off. Bank traders can go short with this run up here. You don't have to be in on that move. Wait for this low to break. Once it trades back up into it during the New York session, then you can target this level down here. We have an overlap with the fib for a projected low, and those equal lows that align. And the market sells off and sweeps those relative equal lows and hits our target on the fib. So you have a blending of two of my concepts together within a narrative using the economic calendar to frame it. So we're not trying to predict this break in continuation. All we're doing is saying, okay, what did they do overnight? They ran liquidity out here and rejected it. We can get short in here in London if we want to, but you don't have to. You wait until the New York session. Use the volume that's used in this time of day with the breaker. So now you have this low projected in time. It operates on it in the London session. At the end of London open, going into Asia's close, then we have the 8:30 in the morning beginning our time window that I've been teaching here on YouTube. Wait, there. Right at the high, it starts it there, and then one more time hits it there. But it's inside of the optimal trade entry. In other words, this level to this level to this level. 79, 70.5, 62. All of this area here is optimal trade entry relative to the London session high. And the low formed here ahead of what we teach is the New York open kill zone. But this is just the 8:30 to 11 o'clock window of opportunity where you can take trades. And this is an example of how you can blend two patterns with time of day targeting, and it does a pretty good job of doing a run to that level. And this is where we're at currently. So not bad. You can look for this type of setup when there's an economic calendar event that's a medium impact or high impact, and if it's set to release during the London session, or if it's set to release during Asia, that time frame, okay, just sets the narrative. And then just use the New York 8:30 to 11 o'clock and frame it with an optimal trade entry and a breaker, and you have a dandy of an opportunity that repeats a couple times a month. Until next time, I wish you good luck and good trading.